Bookkeeping isn't a once-a-year event. It's a habit. That single sentence can change the way you run your business. Because let's be honest, most small business owners don't hate bookkeeping because it's hard. They hate it because they treat it like a tax season marathon. One long, painful sprint in April, or worse, October, where you dump receipts, scramble through bank statements, and hope for the best. But that's not bookkeeping. That's survival. Real bookkeeping, the kind that saves you stress, money, and even IRS headaches, isn't about massive once-a-year sessions. It's about tiny, repeatable habits that keep your books clean and your brain calm. Think about your personal health. You wouldn't skip brushing your teeth all year and then try to catch up with a 5-hour cleaning session at the dentist. That would be painful and expensive. Bookkeeping works the same way. If you ignore it until tax season, you're setting yourself up for missed deductions, messy, incomplete records, extra fees from tax pros who have to untangle it all, and the kind of stress that makes you avoid opening IRS letters. A once-a-year approach guarantees overwhelm. Now imagine brushing your teeth daily, 2 minutes at a time. No stress, no buildup, just clean teeth. Bookkeeping habits work the same way. A quick 15-minute check-in every month, logging receipts weekly, reconciling accounts before the numbers snowball. These tiny habits compound into clarity. By the time tax season arrives, you're not scrambling, you're already ready. Here's what happens when bookkeeping becomes a habit. You know your numbers year-round, not just at tax time. You make smarter decisions because you see reality, not guesses. You catch mistakes early before they turn into IRS red flags. You free up mental energy because your books stop hanging over your head. Consistency doesn't just save time, it saves your sanity. This episode closes out the series, and it's intentional. We walk through reconciliation, receipts, inventory, P&L, and even the difference between cash and accrual. But none of that knowledge matters if you don't put it into practice consistently. Consistency is the secret sauce. It's what turns bookkeeping from a panic-inducing chore into a manageable routine part of running your business. Here's where we're going from here. The case against catch-up marathons. Why waiting months or all year is a recipe for stress. The monthly check-in. How to create a 15-minute routine that works. The weekly micro-habits. Little actions that stop overwhelm before it starts. How to stick with it. Real-world strategies for actually keeping the habit. And a final wrap. A starter routine you can implement today. By the end, you'll not only know what to do, you'll have a clear, simple plan to do it. Because at the end of the day, bookkeeping isn't about numbers. It's about freedom, and the way you get there is through consistency. If there's one thing I've learned working with small business owners, it's this. Almost everyone has tried the catch-up marathon method of bookkeeping at least once. You know the drill. You put off logging receipts, skip reconciling accounts, and tell yourself you'll do it later. Then later turns into 6 months. Tax season hits, and suddenly you're buried under a mountain of bank statements, shoeboxes full of receipts, and frantic late-night Google searches. The problem is, catch-up bookkeeping isn't just exhausting. It's dangerous for your business. Now let's be fair. I get why people do it. You're busy. Running a shop, making products, booking clients, or serving customers takes all your time. Bookkeeping feels like an afterthought. You think it'll be faster. Why spend 15 minutes a week when you can do one big session later? Or you dread it. Bookkeeping can feel overwhelming, so you procrastinate. The logic makes sense in the moment, but the reality is the catch-up method costs you more time, more stress, and sometimes more money. Problem number 1, lost and forgotten receipts. Receipts fade, emails get buried, paper slips vanish. When you wait months to log expenses, you're almost guaranteed to lose track of some. That means missed deductions, which could equal higher taxes. Incomplete records, which could equal red flags if the IRS ever asks you questions, and extra time spent hunting through old emails, boxes, or drawers. What could have been logged in 15 seconds becomes a frustrating scavenger hunt. Problem number 2, messy bank reconciliation. When you finally sit down months later, reconciling your bank account is a nightmare. Transactions don't line up, you forget what certain payments were for, duplicate or missing entries throw off your totals. What should take 15 minutes per month balloons into hours of frustration and mistakes slip through the cracks. Problem number 3, bad business decisions. When you don't know your numbers in real time, you're making blind decisions. You might think you have profit when you don't. You might overspend because you can't see expenses piling up. You might underprice products because you don't have updated cost info. Catch-up bookkeeping robs you of clarity. You're running your business in the dark. Problem number 4, IRS stress. Here's the one that really matters. If the IRS ever sends you a notice or questions your return, you'll need clean, timely records. But if your books are months behind, you're scrambling to recreate them under pressure. That's when mistakes happen. And trust me, IRS agents can tell the difference between clean, consistent books and records thrown together at the last minute. Now, beyond the numbers, catch-up bookkeeping takes a toll on your mental health. It hangs over your head for months. It creates dread every time you think about it. It turns bookkeeping into a crisis instead of a manageable task. That constant low-level stress drains your focus and energy, the very things you need to grow your business. Now let's flip the script. Instead of 6 hours of chaos in April, imagine 15 minutes at the end of each month, a quick receipt log once a week, reconciling accounts while transactions are still fresh in your mind. By the time tax season comes around, you don't need a marathon. You're already ready. And let's look at some real-life scenarios. An Etsy seller using the catch-up method waits until tax time, struggles to match Etsy deposits with gross sales, loses track of platform fees, and misses deductions. One who uses the habit method logs sales and fees monthly. By year end, they have a clear record of gross sales versus fees. No scrambling. And a food vendor using the catch-up method forgets ingredient costs from past events, can't prove deductions when asked, and overpays taxes. Using the habit method, they log supply costs weekly. By year end, can clearly see cost of goods sold per event. And a tradesperson using the catch-up method scrambles to reconstruct mileage logs months later and guesses at expenses and risks audit trouble down the line. Using the habit method, they log mileage weekly, and by year end, they have an airtight record. So why does little and often win? Accuracy. Details are fresh, so you record them correctly. Time saving. 15 minutes a month beats 6 hours of catch-up. Calm. Bookkeeping stops being a dreaded chore. And preparedness. You're always ready for tax time or even an unexpected IRS notice. So to wrap up this section, the truth is simple. Catch-up marathons don't save time. They waste it. They cost you deductions, create stress, and leave you vulnerable to mistakes. The better way? Build a habit. Little and often beats big and rare every single time. Next, we'll talk about how to set up your monthly check-in routine, a simple 15-minute process that keeps your books clean without taking over your life. So if catch-up marathons are a recipe for stress, what's the alternative? A simple, repeatable monthly check-in. This is where you set aside 15 minutes each month to look at your books, tidy up loose ends, and keep your financial picture clear. It's not complicated. In fact, the less complicated, the better. Think of it as a quick oil change for your business. Not glamorous, not difficult, but essential to keep things running smoothly. Why does monthly work? It balances time and detail. Weekly may feel too frequent, yearly is far too late. Monthly is a sweet spot. Transactions are fresh, but not overwhelming. It aligns with your statements. Your bank and credit card statements close monthly, so reconciliation is easiest at that interval. And it creates a rhythm. Once a month becomes a habit. You know it's coming, you expect it, and it's manageable. So how do I create this habit? Step 1. Reconcile accounts. The foundation of your monthly check-in is reconciliation. What that means, you match your records, Excel sheet, or bookkeeping software with your bank and credit card statements. If your sheet says you spent $120 at Office Depot, your bank should show $120 on the same date. If your bank shows a $50 transaction you don't recognize, you investigate it now, not 6 months later. Reconciling monthly ensures your books match reality. Step 2. Log receipts. Next, capture your receipts. If they're paper, snap a photo and upload it to a folder in Google Drive or Dropbox. If they're digital, drag them into the same folder or forward them to a receipts email. In your books, make sure each receipt ties to an expense. Done monthly, this takes minutes. Done yearly, it takes days. Step 3. Record income. Log the income you received that month. Match deposits from Etsy, Square, or PayPal with gross sales. Record platform fees separately so you can see true income. If you do in-person sales, tally those and add them in. Income is the fuel of your business. Your monthly check-in makes sure you see all of it clearly. Step 4. Glance at your P&L. Once you've reconciled and logged your receipts and income, take a quick look at your profit and loss statement, or your simplified version of it. Ask yourself 3 questions. Am I making money? Where is my money going? Can I afford to grow or invest? You don't need a deep dive every month, but a quick glance keeps you in touch with your numbers. Step 5. Note any patterns. This step is optional but powerful. Are Etsy fees creeping up? Did supply costs spike this month? Was this a higher income month than usual? Jot a quick note in your bookkeeping file. Future you will thank you when you look back and see the trend. And there are some tools that make it easier. Excel or Google Sheets are perfect for DIYers who want control and simplicity. QuickBooks or Wave automate some of the process but come with a learning curve. Cloud storage such as Google Drive or Dropbox are essential for organizing receipts digitally, and calendar reminders. Set a recurring reminder on the first Saturday of every month, 15 minutes for bookkeeping. And let's look at some real-life examples. As an Etsy seller, reconciling ensures Etsy deposits line up with sales reports. Logging receipts monthly means no more faded ink or lost slips, and a quick P&L glance shows if ad spend is worth it. As a food vendor, monthly check-ins catch ingredient costs first event sales. Patterns emerge, which events are profitable, which aren't. And as a tradesperson, reconciling catches overlooked tool purchases. Notes on fuel costs can show whether travel expenses are eating your margins. So how do I know that I'm done? At the end of your 15-minute session, you should have reconciled bank and credit card accounts, logged and stored receipts, recorded income accurately, glanced at your P&L, and made a quick note of anything unusual. That's it. You don't need perfection. You need progress. And this works because the power of monthly check-ins is that it prevents overwhelm. Each session is short, manageable, and gives you peace of mind. And when tax season rolls around, you're already ready. No catch-up marathons, no panic, no shoeboxes. The monthly check-in is the backbone of a strong bookkeeping habit. 15 minutes once a month replaces hours of frustration later. Next, we'll break it down even further with weekly micro habits, tiny steps that keep your books fresh and make the monthly check-in even easier. We've talked about the monthly check-in, the 15-minute routine that keeps your books clean and ready. But what if you want to make the process even easier? That's where weekly micro habits come in. These are tiny 5-minute tasks that you sprinkle into your week. They don't replace the monthly check-in, they support it. Think of them as brushing your teeth daily so your monthly dental cleaning takes 5 minutes, not 50. Why do weekly micro habits matter? They shrink the pile. Instead of dealing with 100 receipts at once, you're handling 2 or 3. They keep details fresh. You remember what a purchase was for because it just happened. They reduce resistance. 5 minutes feels doable. A 2-hour catch-up doesn't. They reinforce the habit. The more often you touch your books, the more natural it becomes. Micro habit number 1. Log sales regularly. Pick a day, say Friday afternoon, to quickly log sales. Etsy seller, enter the week's sales, note gross versus net, and record fees. Food vendor, jot down event sales and compare them to supply costs. Tradesperson, record jobs completed and deposits received. This 5-minute task keeps your income numbers fresh and ready for reconciliation. Micro habit number 2. Capture receipts instantly. Don't let receipts pile up. As soon as you get one, snap a photo with your phone. Upload it to your receipts folder in Google Drive or Dropbox and toss the paper copy, unless you prefer to keep it. This habit takes seconds, but it saves hours of hunting later. Micro habit number 3. Quick bank check. Once a week, log into your bank account and scan transactions. Look for anything you don't recognize. Flag business versus personal if they're mixed. Make a quick note of unusual charges. This isn't a full reconciliation. That's for your monthly check-in. It's just a quick glance to catch problems early. Micro habit number 4. Track mileage or travel. If you drive for your business, make mileage tracking a weekly habit. Use an app or jot it down in a notebook. Record the date, destination, and miles driven. Do it weekly while trips are still fresh in your memory. Reconstructing mileage months later is nearly impossible. Micro habit number 5. Review subscriptions. Subscriptions creep up fast. Once a week, glance at your bank charges or credit card to spot recurring payments. Are you still using Canva Pro? Do you really need 3 email marketing tools? Is there a free or cheaper alternative? Catching it weekly prevents small leaks from becoming budget drains. The key is not to add pressure. These micro habits should slip into your existing routines. End of work week, log sales before you shut down your computer. After shopping trips, snap business receipts before you put your bags away. Sunday night planning, check your bank account along with your calendar. Pairing habits with existing actions make them stick. And let's look at some real life examples. As an Etsy seller, on Friday you log sales and Etsy fees. Daily you snap photos of shipping supply receipts, and on Sundays you do a quick glance at your bank account for deposits. As a food vendor, after each event you record total sales and ingredient costs. Weekly you upload any gas or supply receipts, and weekly you jot the mileage for travel to the event. And as a tradesperson, on Friday you record completed jobs and deposits. Daily you snap tool and supply receipts, and weekly you check bank for client payments. Each routine takes 5 minutes or less, but it adds up to a huge stress reduction. The magic of micro habits is that they remove the emotional weight. Logging sales on Friday doesn't feel like bookkeeping, it feels like tying up a loose end. Snapping a photo of a receipt doesn't feel like you're doing your books, it feels like you're using your phone for what it already does. These tiny touches build momentum without overwhelm. Weekly habits aren't about adding more work, they're about shrinking the mountain before it builds. They keep your books current, reduce resistance, and make your monthly check-in faster and easier. Next, we'll talk about how to stick with it long term, because building the habit is one thing. Keeping it alive when life gets busy, that's the real challenge. So you've got your monthly check-in. You've sprinkled in weekly micro habits. On paper, it all sounds great. But here's the real question. How do you actually stick with it? Because let's face it, life happens. Orders pile up, kids get sick, events run long, and the bookkeeping habit you swore you'd start keeps slipping to later. And we all know what later really means. Never. The good news? You don't need willpower alone. There are proven ways to make bookkeeping habits stick even when life gets messy. Strategy number 1. Habit stacking. Habit stacking means you attach a new habit to one you already do consistently. After making your coffee on Saturday morning, do your 5-minute receipt upload. After closing your Etsy shop for the week, log your sales. After checking email on Monday, reconcile your bank account. By tying bookkeeping to existing routines, you don't have to remember. It becomes automatic. Strategy number 2. Calendar reminders. Set recurring events on your phone or computer. First Saturday of the month, 15-minute bookkeeping check-in. Every Friday, log sales. Every Sunday night, quick bank scan. Treat these like any other appointment. If you wouldn't skip a customer meeting, don't skip your bookkeeping reminder. Strategy number 3. Accountability. Sometimes you need someone else to just keep you on track. Tell a friend or spouse. Ask me every Friday if I log sales. Join a small business group where members share weekly wins, like books reconciled. Hire a bookkeeper for quarterly reviews. They'll notice if you're slipping. Accountability turns private promises into public commitments. Strategy number 4. Reward yourself. Small wins deserve small rewards. Finish your monthly check-in. Treat yourself to a nice coffee or a 20-minute break. Keep your habits for 3 months. Celebrate with a dinner out or a new tool for your shop. Rewards make the habit feel positive, not punitive. Strategy number 5. Reduce friction. Make bookkeeping so easy you can't avoid it. Keep receipts in a designated folder or tray. Bookmark your bookkeeping file or your software dashboard. Save logins so you don't waste time hunting passwords. Create a simple checklist. Receipts, reconcile, P&L glance. The fewer obstacles, the more likely you'll follow through. Strategy number 6. Focus on little and often. Remind yourself, bookkeeping isn't about long sessions. It's about little touches. 5 minutes today saves 5 hours tomorrow. When you feel resistant, shrink the task. I'll just upload receipts. Often, once you start, momentum carries you further. And overcoming common roadblocks. Roadblock number 1. I don't have time. You don't need hours. You need minutes. Build 5-minute tasks into your week and a 15-minute monthly check-in. If you can scroll Instagram, you can log receipts. Roadblock number 2. I'll do it later. Later is a trap. Use habit stacking or calendar reminders to make later automatic. Roadblock number 3. I hate numbers. Good news. You don't need to love numbers. You just need to track money in and money out. Focus on consistency, not perfection. Roadblock number 4. I already fell behind. Don't give up. Do a mini catch-up for this month. Then start fresh. Habits are about direction, not perfection. And let's look at some real-life examples. An Etsy seller using habit stacking logs Etsy sales right after updating product listings. The reward? Buys a specialty coffee after the monthly check-in. A food vendor sets a calendar reminder Sunday night bookkeeping check before planning next week's menu. The accountability shares numbers with a fellow vendor monthly. And a tradesperson reduces friction by keeping a mileage logbook in the truck, uses micro habits, and snaps a photo of every supply receipt before leaving the store. Why does this matter? Consistency is the real game changer. You don't need fancy accounting software. You don't need an MBA. You need small, repeatable actions you'll actually stick with. Because messy books don't come from lack of knowledge, they come from lack of consistency. So to wrap up this section, habits stick when you make them easy, automatic, and rewarding. Stack them onto existing routines. Use reminders and accountability. Reward progress, even small wins. Reduce friction so the path of least resistance leads to clean books. Next, we'll wrap up this episode and this season with the final takeaway: how to start simple today and never fall into the once-a-year trap again. We started this episode with a simple truth. Bookkeeping isn't a once-a-year event, it's a habit. And now you've seen why. The catch-up marathon doesn't work. It leaves you exhausted, stressed, and scrambling when you should be confident. The alternative isn't complicated. It's consistency. The big lessons of this episode: the monthly check-in, a 15-minute routine to reconcile accounts, log receipts, record income, and glance at your P&L. Weekly micro habits, 5-minute tasks like snapping receipts, logging sales, or checking your bank account. And sticking with it. Use habit stacking, reminders, accountability, rewards, and friction reduction to make bookkeeping automatic. These aren't big, dramatic changes, they're small, repeatable actions. And they're what separate the business owners who panic every April from the ones who walk into tax season calm, ready, and confident. So don't wait until January. Don't wait until things slow down. Start today. Here's a simple starter plan. Pick one micro habit. Maybe it's snapping receipts or checking your bank account weekly. Start there. Then schedule your first monthly check-in. Put it on the calendar for this weekend. And reward yourself. Make bookkeeping something you associate with a positive outcome, not dread. That's it. You don't need to overhaul your whole system overnight. You just need to start. And why does this matter so much? Clean, consistent books aren't just about taxes. They give you clarity. You know what's really happening in your business. Confidence. You can answer questions from tax pros, lenders, or even the IRS without panic. Control. You see patterns, make smarter decisions, and stop flying blind. And calm. No more shoeboxes, no more all-nighters, no more later. The payoff isn't just numbers, it's peace of mind. Your books don't have to be perfect, they just have to be consistent. Start small, start today, build the habit. Because clean books aren't about IRS fear. They're about freedom. Freedom to focus on the work you love, the customers you serve, and the life you're building. Clean books, less stress, zero fluff.